This morning saw a number of important Eurozone Manufacturing PMI releases that the markets could use as an indicator of how economies in the euro area are faring. As with previous releases this year, they made for disappointing reading as many countries have opted to reduce their demand for goods as their economies weaken, resulting in the crippling of overall industrial production. Most surprisingly, again, Germany's manufacturing output continues to slow, as it has over the last few months. Well, on the line to examine all this in more detail is the head of UK Macroeconomics at Lloyds Bank, Adam Chesters. Thanks for joining us, Adam. Now, we've already seen a steady decline in manufacturing in the euro area so far this year. Meanwhile, Spain's industrial production has gone beyond a 9-month low. What can you tell us about the new figures released this morning?
Well, they show a continued contraction in manufacturing across Europe, which I guess isn't that surprising given the extremely challenging conditions that we've seen in Europe over certainly the last 4 or 5 months, but obviously even going back further than that. Manufacturing is a very important sector for key parts of the Eurozone economy, not least, of course, countries like Germany and to a less extent France. So the fact that the manufacturing sector is continuing to come under pressure, of course, doesn't bode well for economic activity as we move through 2012 and into 2013.
Now, just how important are the manufacturing PMI data releases to countries such as manufacturing powerhouses like Germany, who've seen a contraction in their output over the last few months?
Well, that's it. I mean, Germany clearly has built its economic recovery basically post-war on the back of a very productive and a very efficient manufacturing sector. And of course, we all know the key industries in Germany which have performed particularly well: engineering, auto production, and the fact that we are seeing a slowdown in German manufacturing activity, of course, is a linchpin for which was previously a linchpin for the German economy. Clearly, doesn't bode well. A significant proportion of German manufacturing activity takes place across the economy. And if we do continue to see economic weakness in that sector, I guess what it suggests is we could see rising job losses in manufacturing, which of course could translate into service sector unemployment as well with a lag, because of course manufacturing is absolutely central for many other industries that also take place across the German economy and other economies as well.
So is this a sign then that Europe is ebbing closer to a much deeper recession than originally anticipated?
I think they probably are, particularly in the current climate. Of course, we're seeing Spanish bond yields hitting new highs above 7.5%. There's ongoing concerns about the fiscal consolidation that's necessary, and I guess the tail risks, of course, that the euro could break up. The combination of those is creating a massive climate of uncertainty, an extreme climate of uncertainty across the Eurozone, which of course is damaging both for manufacturing and other sectors, services. So while this uncertainty continues to cloud the outlook, I think what we're most likely to see is manufacturing activity continue to decline as orders get reined in. The other point worth making, of course, manufacturing is the most cyclical of industries, really. Typically, they drive what's known as the inventory cycle. So when economic conditions are strong, what you tend to find is stocks being held by companies rise, orders rise, and that translates fairly quickly into an improvement in manufacturing. Clearly, the opposite also holds when economic activity is declining, stocks get depleted, and orders fall. And I think what we're really seeing at the moment is a symptom of the underlying weakness across the Eurozone economies in France, Germany, of course, in the peripheral countries. Orders are falling, and that's impacting directly on manufacturing with a very short time lag.
OK, moving forward then, what's the market atmosphere like when it comes to manufacturing PMIs? I mean, are the markets expecting further contractions in the future, for instance?
Well, clearly there's a tail risk. I think Germany, I wouldn't underestimate the ability of Germany to reinvent itself to boost productivity. At the moment, Germany is getting something of a subsidy from the weakness of the euro, the manufacturing sector in particular, of course. Manufacturing is tied very closely to export prospects in Germany. So the fact the euro is coming under downward pressure because of the general concerns about the credit crisis in peripheral countries is, if you like, providing an implicit subsidy for German manufacturers. So the fact that manufacturing, notwithstanding that, in Germany is weakening, clearly is, I think, some cause for concern. But I do think that, as I say, German manufacturers are able to respond very quickly. They have a history of improving productivity, good workforce relations as well. So I think Germany is clearly less susceptible to a marked downturn in manufacturing than perhaps other countries, perhaps like France, certainly Italy, and obviously Spain and Portugal, which clearly are suffering the most at the moment. In terms of the general sort of outlook about a deep recession in manufacturing going forward, well, that's really going to sort of come down to how deep is the economic downturn in Europe as we move through the rest of this year and into 2013. We think it will get worse in the second half. We think Eurozone GDP growth, for example, for this year is going to contract by 0.5% overall. So we are looking for an outright decline in manufacturing as well. But clearly it could be very bad, depending obviously on how events unfold in the Eurozone and the peripheral Eurozone countries over the coming months.
OK, thank you. That was Adam Chesters from Lloyds Bank talking to me there about the Eurozone PMIs. That's all we've got time for at the moment. Stay with us throughout the day, though, as we'll continue to provide you with up-to-date analysis and exclusive interviews here on Dukascopy TV. Until next time, though, goodbye.